Good evening, good afternoon, good morning. Welcome to IO Radio with your host, Adam, aka American Scream. And with me, as always, is Sal Bayat.
Hey, everybody.
And it's been a little while since we've gotten together and chatted. I've been doing stuff, you've been doing stuff. And as you DM'd me the other day, you said, I picked a, what? I picked a bad week to
Hell of a
disappear.
week. Hell of a week to go away, let me tell you.
So what's been happening? Nothing new in crypto, right?
Nothing at all. I mean, some of it has to do with crypto. There's obviously been the failure of Silvergate Bank. There's also been the failure of Signature. And of course, there's been a lot of press coverage about Silicon Valley Bank.
Mm-hmm. I'll pull
Now,
the other
Silicon Valley Bank isn't necessarily related to crypto, um, but it is related to the VC ecosystem and a lot of people who are also dabbling in crypto, but a lot of startups. And so this bank had an issue where they kind of bet long on interest rates being low. And when interest rates rose, they ended up getting burned.
So they basically they they weren't completely insolvent, but what they did was they took this deposits they had and they put them into some, I guess, medium term securities that they couldn't liquidate quickly.
Yeah, I mean, there was I can't remember where I saw it, but somebody had posted about the decision that they had made. They had made this decision because even though they weren't hedging their risk for interest rate fluctuations, they were able to make, a few more $1 million if they sort of got these longer term securities and put their deposits there. But obviously, when
So greed.
interest rates started, yeah, exactly. But when interest rates started to rise, then they had problems because now their balance sheet didn't match up.
Everybody kind of knew interest rates were going to go up, so I guess some people are saying, "Why did you do that?"
Well, I don't think there's any question that there's some amount of incompetence here. I think what people have pointed out, what commentators have pointed out, is that Silicon Valley Bank was sort of far beyond any other bank in terms of what they were doing. Um, they were taking greater risks than other banks, and in fact, the what allowed them to do that was a change in regulation that
Or
came in.
deregulation, you mean?
Deregulation, yeah. In 2018, they rolled back some of those protections that had been put in since the 2008 crisis, and they were able to. There was sort of this marker saying, okay, listen, if you have over $50 billion of assets, you are subject to greater scrutiny, greater regulation,
Oh, this is that
and this.
too big to fail stuff.
Yeah, and so this the CEO of this bank, he was even in fact one of the people who lobbied for a change to say, oh no, it shouldn't be $50 billion, that should be $250 billion. And so they were able to get that passed, and what that allowed them to do is, avoid additional scrutiny, avoid additional regulation, and avoid additional requirements on um, deposits and liquidity.
Hmm. Yeah, time and time again, it seems like whenever we see some kind of crash, whether it's a bank crash or a train crash, it's often related to deregulation.
Absolutely. And so there's this gentleman here, the author of this piece on Slate. I thought it was particularly good. He's sort of calling out the VCs, not only for really causing the run on the bank in the first place. It's the Slate article, the one that you were just on.
Oh, this one?
Yeah. Um, so Edward, if you scroll to the top,
Edward
Ongweso.
Ong.
So he wrote a great article about how, not VCs were the ones that sort of prompted this run on the bank. And then, of course, they are the ones that were crying the loudest for the bailout for deposits over $250,000 to be bailed out. And he asked the question, why is it that so much of our technological development is tied up in capital that these VCs have control over when, in terms of the benefits that society realizes, there are few. So we've gotten, I mean, he points out we've gotten some better consumer electronics, we've gotten some rideshare applications, but you have to ignore a lot of the exploitation that underpins the economic model that these things are based on. And did you read the article? What did you think?
I haven't. I skimmed through it, but I haven't really read it because, as I
Okay.
said, I said, let's just jump on and record a quick little show and catch up on things. In the future, we probably would have this a little bit better planned. But it's been a while, and I just wanted to jump into things. Maybe we won't even post this, but
Yeah,
um,
fair enough.
obviously I was familiar with Silicon Valley Bank. I listened to Patrick Boyle's video on it, which I thought was very informative. I'm not at all surprised that regular banks are failing too. I mean, people act like this is like some kind of sign of the end times. But there's a really good article that talks about how often banks fail, and in the last couple of years there has not been a whole lot of them failing at all, which is unusual. Usually there's a couple of them every year because you have some people that are in charge of these banks that make stupid decisions. So that's not something you can control. And a lot of times what they're doing may not even really be legal. So by virtue, but is SVB, are they indicative of the whole entirety of the banking sector? I don't know about that. So I'm not really part of this bandwagon of people thinking, no, this is a sign that there's going to be another collapse. They just got overextended. I think the other banks like Silvergate, is much more interesting to look into in terms of why they collapsed. And I mean, do you think that there's any kind of similarity between Silicon Valley Bank and Silvergate in terms of what the dynamics were that caused them to fail?
I mean, maybe at a very high level, which is greed, but other
Right.
than that, I don't think so.
Yeah,
Um,
completely different dynamics. And I think linking all of these banks together as if they're part of some kind of a pattern of failure is not necessarily proper. And it's a shame that Silicon Valley is overshadowing what is legitimately a kind of a cascade failure in the crypto industry with these other banks. SVB, isolated instance, maybe there's some more banks that immediately jumped on this bandwagon. I guess there's a list, right? Somebody knows when they rolled back these regulations,
oh, well,
which,
there's a list. There's a list. If you go to the FDIC.gov, they have a failed bank list. So if you
right.
Google FDIC.gov failed bank list, you can go right. And you're right. There's a few every year. I don't think there's been one since 2020. But there are a few every year. There were a number in 2019 and in 2020. So I don't know. I don't know if the passing of that regulation has accelerated bank failures. There's always going to be mismanagement. I do think that it brings up an interesting point, which is why should people be forced into a for-profit system for regular basic banking? I'm not talking about loans for businesses or for mortgages, but for just basic checking, for depositing your paycheck, for paying bills, for sending money to other people. These are things that you have to do. Those are things that are just required in order to exist. So there is, in fact, a sort of natural monopoly that exists for banking services. And so one of the interesting things that's come out of Silicon Valley Bank, the failure of Silicon Valley Bank and Signature, are people are sort of questioning this dynamic. Why isn't there a sort of a public utility for banking where for these basic functions, people aren't charged and you can just
Yeah, I think we do have something
send
like that,
money?
right? Isn't that what the
Well, there's
credit
commercial banks and there's
unions is? Credit unions.
well, still technically, I mean, a private entity. And some, in some countries, the post office fulfills some of these services. So you would be able to do banking at the post office for no fees, essentially.
Uh huh.
You might not have access to overdraft, but you'd be able to deposit money and send money. There's no minimum balance requirements. There's no $6 a month charges. And I think it's a good question. There probably should be something like that.
Mm-hmm. Yeah, if you look at this screen here, the bank failure since 2009, you can see that at the in the middle of the recession, there was a lot of bank failures, but that was obviously tied to deregulation too, and everybody got wrapped up in all those the real estate speculative default credit swaps. And then once things started clamping down, the bank failures went down, 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 down for quite a while. And I suspect we're going to see them ramp up again presumably because of the Republicans' efforts to continue to deregulate the corporations and let them get away with more stuff.
Well, like you're certainly right. Like 2010, 2011, 2012, there's a lot of failures, and it does seem to sort of die down. And certainly in the last few years, it seems as though there have been fewer bank failures. However, I mean, maybe part of that is just has to do with lower interest rates and the fact that quantitative easing meant it was easier for banks to get access to capital. Now that the access to that liquidity is tightening, perhaps there'll be more failures. But given you look at how many failures there were in 2010, 2009, and then you see that there weren't any from 2020 to 2023.
Yeah.
So that's quite interesting.
Yeah, obviously the pandemic also curtailed a lot of economic development. It'll be interesting to see, but I will not be surprised if over the next couple of years we're going to see an increase in bank failures. And there's nothing that just happens. So Silicon Valley Bank made some poor decisions. Obviously, I don't think it's the freak out thing that people are saying. Although I don't know if you saw on Reddit, there's somebody parked in front of Silicon Valley Bank with a Bitcoin. Did you see that picture?
No, I haven't.
Let me find
That sounds amazing.
Let me find.
Your own bank. That's pretty hilarious.
So some Bitcoin dude rented his truck and put this on there. And what I'm amused is he didn't rent this with crypto.
No.
And whoever printed up that big sign there got paid in fiat.
Yeah, I mean, I guess there's a larger question here of what happens to crypto with the failure of signature. It looks like regulators are tightening things up and are maybe, I mean, I want to be very tentative here, are maybe catching on to the fact that this is all a giant scam that's based on sucking up fiat liquidity from greater fools. So what happens to crypto now with the failure of signature, with Silvergate, with payment rails being disrupted?
Yeah. This to me illustrates the fact that no matter what happens, crypto enthusiasts will spin it as if it's good for Bitcoin. That's one of the kind of memes that we hear a lot of. This is good for Bitcoin. World War III, that's good for Bitcoin.
Well, why is that?
It isn't actually that. It's just it's a mantra that they just keep repeating.
But
like
why do they
hodl,
repeat it?
They're just, the whole point in crypto is don't sell, because they're all inches away from a bank run, turning their entire industry insolvent. So whatever they can say and repeat, coerce people into buying and not selling, just kind of puts off the inevitable. Yeah.
So you would say that it serves their financial interest to constantly be propagandizing and using anything at all as encouragement, as to incent people to buy and to bring fiat liquidity into the system.
Oh yeah, absolutely. Yeah, I was just having a discussion with somebody on Bitcoin, a guy who's a crypto enthusiast, who was saying, one of the big arguments now is Tether.
You mean the totally legitimate stablecoin with attested reserves? Tether, that Tether?
Speaking of insolvency, right? Let's look at this one.
You mean the Tether that has 70 billion of reserves but can't make even
Here's their latest
4% on
statement.
that?
Here's their reserve statement. I don't know if you've seen this one.
Let's see. Dollars held in Bahamas Bank, 30%. USD loans from fellow crypto scams, 29%. Crypto assets that trade, 50 billion. Okay. Tether t-shirts, horse. That's good. Yeah, that sounds about right.
Yeah, and I want to point out that horse has some intrinsic value there. It can also create value via manure. So
I'd like
they're getting a little bit more progressive, obviously.
I'd like to retract my statement and apologize if I've ever said that Tether has no value.
So there's apparently
it does.
81.63 billion Tether around. And of course, they claim that 50% of those are in T-bills and bonds. And they claim that several of them were up for maturity within like 30 to 60 days last quarter. And people are like saying, if that's the case, we should see some of that movement in the market, and nobody can find where those things
Well,
are.
it's just like look at their posted financials. You know, if you had let's say you have $10 billion, if you take that and you just buy treasury bills that pay 4%, I mean, you're going to be making way more than what Tether makes. So there's no way to account for this. There's all the, first they were claiming it was commercial paper. People who worked in those markets said there's like, we've never heard of these guys. If they were buying that much commercial paper, we would know about it. There's the fact that they've never had a proper audit. They've had attestations,
Right.
where they've moved some money into a bank account for a fraction of a second, had an auditor, had somebody look at it, and then moved it out immediately after. That's not the same as having, 70 or 80 or $60 billion of actual reserves.
Yep. And by the way, this is obviously a funny, humorous pie chart. It's not actually their actual reserves, but their actual attestations are so hilariously inadequate that somebody on Bitcoin made this funny pie chart, which I think is probably possibly more accurate than their actual attestation. Speaking of attestations, I'll put up another graphic that is one that I created, which kind of illustrates the difference between an attestation and an audit.
Yes.
So yeah, we've got all kinds of weird things going on in the crypto industry and in the traditional finance industry. And of course, the crypto people will be like, see look at what these banks are doing. This is why you need to move to crypto. And crypto is even worse. You can take the most irresponsible, negligent, criminal thing a bank has done, and if you square it, it's probably not as bad as what your average crypto exchange is doing on it.
Absolutely.
So, okay, where were we? We're talking about
there's a
Silicon
question.
Valley Bank. We're talking.
Yeah, there's a question, I guess, about how these. So there's a question about how everything that's recently happened will end up affecting crypto.
Yeah.
There was a good question that somebody asked on Bitcoin in a thread about, okay, so what does this mean? What happens to, let's just say, Bitcoin? And I think we can use Bitcoin as sort of a proxy for the entire crypto market, right?
Okay.
And I think it's a good question, is as liquidity dries up, what do we expect to see? And I want to make a prediction so that,
Well, before you get to that, let's
okay.
Since I'm a moderator on the largest crypto critical subreddit, I hear, I kind of see a lot of what people are thinking and questions and concerns. And one of the recurring things that people have kept asking is, if everything is collapsing, why is the price of? That's a complicated question to answer from one perspective. But from another, it's a super simple answer. I don't know if that feeds into where you're going with your predictions.
Absolutely.
But I'll just lay that out there.
Yeah, I think there are two reasons there. One is exchanges are the ones that report the price. They can do whatever they want. There's no transparency. There's no scrutiny. There's no regulation. So they can report whatever it is they want to report.
Right.
They can say the prices. They can wash trade. They can do all sorts of things. There's that reason itself. And of course, exchanges have a vested interest in making sure the price is as high as possible, or reported to be as high as possible, because they want you, when you buy in, they need as much fiat liquidity as possible. Because if withdrawals exceed the amount of fiat liquidity that's in the system, things are going to collapse. This is just how investment fraud works.
Right.
So they have a vested interest in making sure that price is reported to be high. When you come in and buy, they want as much money.
One of the things I want to say is, anytime anybody says, here's the price of some crypto, here's the price of Bitcoin, here's the price of Ethereum, that number that you're hearing just came out of nothing. It came from somewhere. It came from probably one of a handful of central exchanges: Coinbase, Binance, Bitfinex, Kraken, whatever. But none of those companies are anywhere near as well regulated as your typical bank or any of the traditional stock exchanges. So we are used to, the price of IBM and the price of General Motors. That's really solid. When we hear that, But there's a lot of oversight. There's a lot of transparency. The SEC is breathing down the neck of all these trading firms. They have their hooks into everything. They can see the activity. They're monitoring it. Sure,
And it's
there's some hanky panky going on occasionally, but for the most part, those figures represent real, actual trades. Any one of us can pull up our brokerage accounts and buy and get at that market value. And if there's a problem, we got people we can call that'll protect our interests. In the world of crypto, none of those exchanges have any transparency, any oversight. We have no idea if the price they list for Bitcoin they just pulled out of their butt. We really don't know. Now, obviously, there's limitations to how ridiculous they can get. Just because if they say the price of Bitcoin is 10 cents or $10 million, it's going to destroy their credibility. But
that's right.
We really don't know, and that's. So right off the bat, you have to take that with a grain of salt. And then, of course, there's the very real, I hesitate to say possibility, because there's so much evidence that these exchanges are wash trading, they're running arbitrage bots, they're manipulating the market. There's tons and tons and tons of articles.
They're liquidating their own clients. They're manipulating the market to liquidate their own clients. They're giving people leverage and then using that against them. Yeah. So it's really unbelievable. There are things that just they've been illegal for 90 years in the regular financial system. And like you were saying, there's all this regulation, there's all this oversight, and still bad things happen. Still you have people that try to cheat the system and succeed. How much worse do you imagine it's going to be if there's none of that? Of course it's going to be worse.
Yeah. So we just, there's that dynamic there of you just can't trust anything these exchanges tell you. But for the sake of continuing this discussion, we'll have to assume that maybe the published numbers are somewhat relatively accurate and are reflective of real world trades, but we have inadequate evidence.
Yeah, I don't think I could make that claim. So I think we agree there's why is the price of Bitcoin going up? Well, there's this issue. The first issue is the exchanges can say the price is whatever they want. So they can say the price is going to be 26,000 or 22,000. Now, the second reason that I think the price is going up, this has to do with investment scams and how they work. When liquidity starts drying up, what's going to happen? Well, in the case of crypto, liquidity is going to dry up in all the shit coins first. So BTC and ETH are going to be liquid longer than everything else. So what you should expect to see is people trading shit coins and other crypto for Bitcoin.
And when we say shit coins, we're also referring to stable coins.
Yes.
And although all coins basically shit, but stable, you have your meme coins like Doge, and you have all your little rug pull coins and Ponzi coins. And then you have stable coins, and then you have, I guess I hate to say this, blue chip crypto, which would be BTC and ETH, are considered more stable, more long term.
I would say they have bigger cults, so they have greater access to liquidity potentially.
And so everybody assumed if you have USDC or USDT, that's backed with dollars, so it's relatively stable. And again, I put stable in quotes when I refer to stable coin. But now we're seeing these on-ramps or these off-ramps are not available anymore.
Well, yeah. And I mean, what are you going to do if you have $1 million of Doge and you either can't trade that for actual fiat, or you even suspect that you might not be able to in the future? What are you going to do? Well, you're going to put that into a coin. You're going to put that into some crypto that you think is going to give you a greater chance of exchanging it for liquidity in the future. And that's going to be Bitcoin or Ethereum. So that's why those prices are going to go up. You will pay a premium to get your money out of these illiquid shitcoins and into something that might give you a better shot at exchanging it at some time in the future.
Yeah.
And so that's the other reason why we're going to see the price increase.
And I don't know if any of these exchanges are actually dealing with fiat, right?
I do not trade in crypto. It's not something I want to get involved in. I think there's real ethical problems with it. So I don't know about the specifics of how you cash out on exchanges.
Yeah, but I assume that that's what they do. There's like a level of abstraction. that's their plausible deniability that they're not laundering money, right? Is if you're selling one token for another token, then they off put all of the money laundering restrictions and regulations on whoever actually
Absolutely.
converts those tokens into actual.
Exactly.
Now, of course,
Just
regulatory agencies are kind of, they're cracking down on this. They're recognizing this is just a scheme.
Well, it's interesting because they were apparently investigating Signature Bank before they closed it down. So I wonder what's going to come out of that investigation now that the FDIC is in there, now that potentially all the email correspondence, all the access to all the records, now that government officials can get access to, what are they going to find? It may take a while, but it's going to be very interesting to see what comes out of that.
Yeah, so basically what you're saying is the reason why Bitcoin is either staying stable or going up is because all of the other shit coins and stable coins that people are unable to cash out, they figure the safest way, if I can't get my cash out right now, the safest thing to do is to put it in Bitcoin. So
right.
That's what's happening.
So we would expect to see a pump of Bitcoin as liquidity dried up. It may be one of these scenarios that, we're not going to see, the exchanges aren't going to report a collapse. They're just going to go out of business. Right? Eventually, there's going to be not enough liquidity. There aren't enough dollars going into the system to support the withdrawals. And what's going to be interesting to see is what happens in the case of Bitcoin mining, because obviously miners need to pay their bills in fiat. And right now, banks aren't looking to make big loans to cryptocurrency miners. Well, this is not something they want to do.
Let's also say that SEC clarification happened where they said banks cannot use crypto assets as principal against a loan. So there's no collateral.
Okay, I asked a question on Twitter. I didn't receive any response, but I was curious if anybody knew if, either Signature or Silvergate had accepted cryptocurrencies as collateral for loans, because obviously that's going to be fraudulent. Now, I suspect that they may not have reported anything like that, but as you said, when they start looking at the details of Signature, I wonder if that's what they're going to find. I'm
pretty sure. Well, let's look at Tether, for example. Tether, Bitfinex, when they were sued by the New York Attorney General, they claimed that all their assets were 100% backed. And then upon further investigation, after the discovery by the New York Attorney General's office, found out that, there was never fully back. And this is from 2021. And it was then that they started to come clean about how they were using other crypto as collateral, which, if you're doing a stable coin and you actually have the audacity to argue you're holding crypto as an asset backing another crypto, that's crazy. And that's what they were doing.
It's like FTX when they were using their own shitcoin to get loans.
And here's another article. This is the NYAG one that I think that kicked it all off right here, and where they just called them out. A stable coin without stability.
So what's happening is liquidity is drying up in the crypto ecosystem, and payment rails, payment on ramps, off ramps are being demolished. So what's going to happen? Well, for Bitcoin, eventually at some point, miners aren't going to be able to pay the bills, and the hash rate is going to collapse. And when that happens, you'll see the price of Bitcoin start to follow the hash rate. And I know this is something that I've sort of had arguments about.
Yeah, I don't know if I buy that.
I want to clarify this. Bitcoin has two different phases, and this is where my prediction comes in.
Okay.
There's the bootstrap phase and there's the market phase. When you create Bitcoin, when Bitcoin first existed, there was no market. There was no centralized exchange. So how it was valued was based on the cost to mine. Now,
I would disagree with you there.
Hold on.
Okay, but I'm just saying I think that premise is questionable.
This is to say that miners aren't nonprofits. They're obviously going to expect some type of reward. And when you look at how the halving schedule and mining difficulty influences price expectations, it's not that it's a perfect correlation, but it's generally going to track the mining cost.
I don't think it does, though.
But if you look at the history, it does. So that when hash rate explodes is when fiat on-ramps get established with Mt. Gox, I believe in 2010, and with the three big exchanges that came online in early 2011. Those are the two first giant spikes of hash rate. The one in 2011 is massive. It's a massive spike. And when you look at the price follows the hash rate. Now, after those markets are established, you have the market phase of Bitcoin, and you can say that, okay, hash rate is going to follow the price because now we have speculation, you have fiat liquidity coming in, and that's correct. But initially, price is going to follow the hash rate. It's only when you establish fiat liquidity, fiat on-ramps, that you get the hash rate following the market price.
Okay. Well,
And that's true if you look at the history of hash rate and price.
I would argue that Bitcoin's price has never been the result of anything other than market manipulation. And there's plenty of evidence that even when it went from $150 to $1,000, that this was the result of market.
That's absolutely correct. I'm not disputing that, and what I'm saying does not run contrary to that statement, because of course I'm talking prior to 2011, right? I'm not talking about 2013. And initially, the only way people have to value Bitcoin is the amount of money they spend on mining it.
Well,
because
okay. I see what you're talking about. Yeah, in the very, very early days, because there was no
Yes.
speculation whatsoever.
Right.
Yes.
So you,
But I mean,
you
okay.
have to consider then, if you cut off all the payment on ramps and you cut off all the exchanges and they all go away, well, what happens?
Well,
Well,
okay,
the
you're
same
talking
thing.
about in the absence of hype and marketing and all of that other stuff, what the organic natural price of Bitcoin should be. You're right; it should be tied
You,
to the cost to mine. But
you can still.
I think
Sorry, go ahead.
I don't think that dynamic has been in effect in the last 10 years.
You're absolutely correct. And my point is that you transition from a bootstrap phase into a market phase. We've been in the market phase for the last, since 2011, so the last 12 years. Okay, what happens if you? But this is where
Well,
the
we
predictions
don't want to
come
go
in.
off too much on off tangent though.
No, but this is what's going to happen to the price of Bitcoin.
So you
hash
think
rate is going to collapse because when you cut off payment rails, when you cut off access to fiat liquidity, when you cut off the centralized exchanges, when those things go
all
away,
you have left is the cost to mine.
exactly, and you regress into the bootstrap phase.
All right,
and you go back.
Okay, so I see what I see where you're going. So I mean, how soon do you think it'll reach that point?
Oh, damn it! Now you're asking me for a timeline.
Well,
I don't
mean,
know,
you know,
because it's a
100
good
years
question.
from now, I would agree with you
Yeah.
that whatever you're willing to waste on it, but I don't see the hype train derailing. I mean, it's gonna lose most of its cars.
Like Bitcoin just naturally has this sort of, it's like a force of nature in that it's going to drive people to collude to try to sell it for more. So even if we kill everything off, maybe you get rid of all the payment rails, you get rid of all of the centralized exchanges, maybe a bunch of miners get together and decide to sell directly to the public. I mean, who knows what can happen?
Mm-hmm.
But in terms of how long until we see that hash rate collapse, it really depends on how much liquidity is actually in the system and how much liquidity miners can get access to and what their runways are. If a miner has $1 billion in the bank because it had a loan, it's probably got some time. It can probably survive for a bit longer. So I can't make that prediction, but what I can say is that if you see hash rate collapsing in Bitcoin, the price will soon follow, especially in an environment where access to fiat liquidity has been cut off. Now, if access to fiat liquidity and centralized exchanges are still around, then this doesn't apply because we're still in the market phase. We haven't regressed back to the bootstrap phase. So that's all I'm saying is look for that hash rate collapse.
Right. Yeah, so I got an article here. This is from 2021 showing, and the most reputable exchange out there, Coinbase, was caught wash trading and manipulating the market. So, there's lots and lots of evidence that whatever these numbers are may or may not represent natural demand securities. And this is one of the things that's so hard to predict. Well, what's going to happen to the market? If these were traditional banks, and see what you're seeing like with Silicon Valley Bank, to bring it back around full circle, is this bank didn't technically completely collapse or fail. Maybe the brand identity, but the feds have swept in and they're going to salvage as much as they can. They're not. It's not a rug pull, you know, like what we might see in the crypto industry. These traditional banks, there's so much protections. They'll come in and they'll minimize the damage. I don't think we'll necessarily see that in the crypto. These exchanges, and of course, this is probably something I thought of earlier, which was it's a shame that Silicon Valley couldn't go, oh, we were hacked and all of our money is gone. That's one of those features that the crypto exchanges can get away with when they actually don't have any money anymore because of their own greed or negligence. They can always claim they were hacked and somebody stole all their stuff, but you can't do that with the real money.
Well, listen, beware Saylor's law. Absent constraints, any unethical behavior that can occur will occur. And that's what we see time and time again, right? This is, what you're pointing out with the wash trading, or with, claims of being hacked when in fact you've embezzled all the money. If you don't have constraints, bad stuff is going to happen. Unethical behavior is going to happen. Now, and that's why if you start putting constraints around crypto, if you start making laws, if you start sending people to jail for bad behavior, for criminal behavior, and you start regulating this stuff properly, or as I would say, we should just ban the trafficking of speculative digital tokens, then all of this collapses and things regress. They revert to their inherent value, which for Bitcoin is zero and other crypto is zero.
There's some discussion over, how do you police this industry? I guess you're in the camp that you just think it should be banned, right? I just think
if you want to
laws
mine,
need to be enforced, like fraud, misrepresentation, and then
that's a good way to start.
Just that what really drives the crypto industry is their ability to make financial recommendations that they can argue aren't financial recommendations and aren't subject to the same kind of scrutiny that regular companies and banks and financial institutions make, where they can't make a statement without revealing any conflict of interest that they may have, or that they're paid spokespeople or this or that, or actually they have to be honest about the true risks involved before they can make this kind of stuff. I think if you just required the crypto places to do this, that would probably put some heavy limitations on them. Of course, it would also probably put a lot of the crypto social media communities out of business, that have zero tolerance for anybody calling attention to the actual risks.
Well, what they've done is they've said, I don't have to obey the law. Well, why don't you? Because I choose not to.
Well, because I'm outside of the law.
So I can go into this. Yeah, I can go into the supermarket. I can take a bunch of stuff, and if a cop shows up, I can just show them that I own Bitcoin, and it's fine. I don't have to obey the law. It's okay,
really
as long
sense.
as no, it doesn't make any sense. So I think there has to be some accountability for what's going on here. Right now, there isn't very much.
If you look at the picture I've just put up, this is a tweet that CZ, the CEO of Binance, or whatever he is at Binance. I don't even know if anybody knows who's in charge of everything up there. But now that their BUSD stablecoin is collapsing, he's getting people to switch over to another one. And I think this is one of the illustrations of why the crypto industry is so hard to kill. As soon as one thing collapses, everybody scurries over onto another train and rides that until that derails. And the thing that has the rest of us scratching our heads is who's following along with this. I guess it's everybody who still has, quote, value tied up in the market. And they, it's like buying a crappy car. You can't really talk crap about the car if you ever hope to sell it. So you got to continue to pretend that this car is good. I don't know.
But let's go back to what you said about stocks, about you would never do this for, buying shares in Apple. And why wouldn't you do that? Well, my financial success is going to depend on what Apple does. Now, there's recently has been a change, since GME, there's been a change where I think people are are actually engaging in the type of pump and dump scams that use this kind of propaganda for stocks. But naturally, you wouldn't see this because my investment, the success of my investment in a company doesn't depend on other people necessarily buying it. It depends more on, does that company generate revenue? Do they have cash flow? Are they making useful products that
Well,
people are
there's
buying?
also a difference between hyping a stock as an individual in an obscure social media group and running commercials and billboards and buying naming rights to
Oh,
stadiums
so
where, um,
I don't know about that. Like, I think that there's a number of stocks that we've seen that are essentially like, let's take BBBY,
right, Bed
Bed
Bath and
Bath and
Beyond
Beyond,
and GameStop
right?
have
They're
these meme stocks have been hyped, and people are pumping and dumping based on false claims about the
and
potential.
the question is, who's financing? Like, Reddit is obviously getting a bunch of money for these communities. Not only are people buying Flare or gold or whatever it is that they buy, but there's probably a lot of advertising revenue. I'm assuming that comes from whether it's Wall Street Bets or some of these other subreddits. But ultimately, who's financing all of this? Like, who, is it just organic that people developed a cult behind BBBY, or did somebody actually go, well, wait a second, I can run a pump and dump here? Because there's no value in retail buying Bed Bath and Beyond stock. It's a bankrupt company, but somebody has realized that they can manipulate retail traders. They can get them to believe that there's going to be a short squeeze. There's going to be the mother of all short squeezes, and the stock is going to go to
But I do think
$10,000.
that's largely isolated to just a few isolated Reddit subreddits.
But I think it's becoming more
But I
in
do
the
think it's going
in
to
the
be cracked
private.
down. I bet there's been some
I hope
crackdowns
so.
on that.
Well, there's a lawsuit right now because there are some allegations, and again, these are allegations that people like Ryan Cohen have been involved in this type of pump and dump scam. Specifically, I think he's being sued as it pertains to Bed Bath and Beyond.
Oh
But
yeah,
what's going to happen is, as people in the business community see this happening, they're going, "Oh, wait a second. So you mean we can still run pump and dumps like in the
no, no, no,
1930s?"
no. Look, here's a good example.
Oh,
Here's a good example. So see, the SEC is all over these people that do this stuff when it's
yeah, but
related to
but how do you
stocks.
track it down? It's like, it's hard to pin down. Like, if I like manage to send some money to some influencers in Nigeria who, because there are people that run companies that their whole point is to promote fraudulent investments for crypto. I can do the same thing. I can pay the same people to do it for a valueless penny stock. How are you going to tie that back to me? It's very hard. Now, I understand, sure, when it's obvious, the SEC can potentially crack down. But if I have $1 billion and I know how to move money around, I mean, tracing that back to me is going to be very difficult. And, and let's be honest, one of the best perpetrators of poop and scoop and pump and dump scams in the 20s became the head of the SEC, right? Joseph Kennedy. And he became extraordinarily wealthy through running these scams. He was essentially a billionaire, never was prosecuted, got to keep his fortune. So other people are looking at history and going, hey, if I manage to scam people for a large enough amount, I'm going to be able to keep that money. Hell, my son might eventually be president.
Mm-hmm.
So the lack of enforcement is an issue. Like, the lack of actually having laws that apply to extremely wealthy investors, I think, is a big problem.
But see,
And what we're doing is we're incentivizing fraud. We're incentivizing bad
this
behavior.
is a common argument though that we hear, right? Is you know, we can't catch all the criminals, so therefore law enforcement doesn't work. Therefore, try my alternate scheme. Okay, maybe it's got a lot of criminals too, but since traditional law enforcement can't catch all the criminals in the traditional system, what's the harm in using my system? And I don't like that narrative, and I think um, you know that's something that we need to kind of not let take over the discussion.
Yes, exactly. And I mean, this is exactly the argument that cryptocurrency uses, right? They say, well, this system is corrupt, so use cryptocurrency. And I think we have to acknowledge that there are problems in the traditional financial system. There are problems in terms of regulation.
Right.
There are problems. Like, we have to be honest about the problems that exist in the economy. But, where I think we differ to crypto proponents is we say, well, their system is not, that's not how you solve these problems. In fact, that's how you make the problems worse. And empirically, we can say that.
Yeah.
Because it does make the problem of
If
bad
I thought
behavior and
crypto
scamming
really
worse.
did something better, I would be the first to admit it, but I have yet to see that, and that's something we can talk in another show of all the claims that blockchain supposedly do things and how that doesn't work. So we've got something interesting planned. This will be exclusive. We'll see about doing that if we get it set up. I'm not going to go into it until we know what's going to happen. So is the crypto industry collapsing, or is this just another domino that's going to fall and not set the whole thing down? What do you think?
I think it's the beginning of the end. And I think it's not a guarantee, because maybe something changes politically and all of a sudden you have crypto getting reintegrated into the banking system. But what it looks like right now is that it's the beginning of the end. The payment rails are being demolished and authorities are starting to crack down. So I think what we'll see in the future is an eventual collapse of prices of crypto.
Okay, I think the beginning of the end happened a long time ago when Bitcoin failed as a currency. It had a blossom of when all kinds of places like Steam and these other companies started accepting crypto for actual payments for stuff. And then once that mess manifested, they realized that this was not, the technology wouldn't work. It was too speculative, and they abandoned it. And I don't think crypto has ever recovered from that. Its adoption has never really improved from that time a couple of years ago when suddenly everybody was accepting crypto and then they stopped. That to me was the beginning of the end. Once Bitcoin stopped becoming a currency, then it had needed to be rebranded as digital gold. That was that's began this long string of desperate schemes that people have been using to try to keep people from buying, from selling, and continuing to buy. I do think the collapse of these recent banks is a major blow, but I've always contended this industry, because it's decentralized, it's not Bernie Madoff or Charles Ponzi. It's not one guy you take down and then everything disappears. It's gonna slowly fail over a long period of time. I think we both agree we can't predict how long that's going to go and what the price of these things are going to be over time. I think, maybe, I do think that the next year is going to be really bad for crypto, and I don't see it getting better.
So your prediction isn't 500K Bitcoin by end of year?
Probably not.
Okay.
And I don't even, like I said, price predictions are an interesting, convenient way of trying to measure something. But in this industry, it's so phony. I just feel like I feel dirty even trying to do a price prediction.
Almost as if people have price predictions so they can try to incentivize people into buying their bags. One might say.
I think right now, see, the problem is you don't even know who's holding crypto. I mean, we know Michael Saylor and we know Grayscale are holding crypto and a couple of other people, but it's hard to tell who has how much of what. So it's real, and that to me is a key. Like if you're analyzing stocks, right? You can,
I think,
by the SEC will let you know mutual funds. You can see what their holdings are. You can see how much the principals have, and you can use that in analyzing the price movements and the predictions of things. But you have none of that. There's no technical analysis in crypto, so it's just total speculation.
entirely speculative.
Well, thank you. If anybody actually listened all the way till the to the end,
To our 3 viewers, thank you.
and you got to start somewhere, I guess. But anyway, hit that subscribe button. It would be nice. We don't have a Patreon or anything like that. We're just putting this out there, wanting to share with other people, and hope you like it. And until next time.